So again, make sure you understand, folks, what we are razor sharp focused on right now is what does that picture of institution buy and sell orders look like on a price chart? Let's start with that. Notice right here, okay, this yellow shaded area, prices are moving sideways. So there's obviously buying and selling going on. Let's only stick to, and another thing I want to say, so everybody's focused, let's only stick to things we know to be true. Let's not talk about anything subjective or anything we don't know to be true. Let's not make any claims or anything that are complicated. Let's just stick to things we know to be true. Here we know that prices are trading sideways, which means there's obviously buying and selling going on. Here, when prices decline or fall, we know that that can only happen because actually supply exceeds demand up here in that yellow box. But we only know that after prices fall, which is great. That's fine. So once prices decline away from this level, we determine that supply exceeds demand here. There's a big stack of sell orders on the trade desk. Okay? This is the Japanese yen. Now, this is where I would say that banks are selling the yen. Okay? Maybe it's the Bank of Japan, whoever it is, it doesn't matter. But this is where banks, institutions are selling the yen. One of the many things that tells us that it's the big money is because the average retail trader, like us in here in this group, don't have an account size to cause a supply level like this in the Japanese yen. I mean, does anybody with us here today have an account size to cause that? Probably not. So if it's not our supply, whose supply is it? Make sense? Now, odds and answer number one. How did prices fall away from the level? Was this a strong move in price or a gradual move in price? Okay? Odds enhancer number one says the stronger the move in price away from an area, the more out of balance supply and demand is at the area. Okay? So keep that one in mind. All right? Because here's the thing. There's three ways prices can leave any level. Whether it's a rally or a decline is irrelevant. With both of those, there's only three ways that prices can leave an area. It could be a gradual move away from the area. It could be a stronger move away from an area, maybe with big red candles like this. Or the third choice is a gap away from the area. Okay? So I think we'd all agree that this was a pretty strong initial drop away from the area, suggesting a big supply and demand imbalance here. Odds enhancer number two. How much time did price spend at the level here? Was that a lot of time or just a little time? Okay, we'd probably say that was just a little time. There's just a few candles in there. If you want a good rule of thumb, for me, I look for like 3 to 6. Very ideal in any time frame. All right? Anything, too much more than that, not great. And I'll explain why in a moment. Anything less than that, for example, if you're looking for 2 candles to be a supply or demand level, now kind of everything in your chart becomes supply and demand. Okay? Does that make sense, Maurice? Right? So I'd say the general rule, 3 to 6 is good. So now why is that though? Why are few candles better than more candles? A lot of people here have read trading books. The trading books all say if you're looking for key support and resistance levels on a chart, look for areas on the chart where there was lots of trading activity. Many candles on the screen, right? Well, think about it. At price levels in any market, where supply and demand is most out of balance, are you going to get many transactions or very few? Right? Think about it. At a price level where supply and demand is so, very much out of balance, which is where you're going to get the biggest turn, you're going to get many trades or very few trades. You're going to get very few, right? There we go. Yeah. So it's very few. So the question is, to that odds enhancer, what does that look like on a price chart? Is it many candles like all the trading books say, or is it very few? It's going to be very few, right? So actually the trading books teach people to ignore the good levels, and that's a good thing. We like that. All right, so that's 2 odds enhancers, right? So instead of looking for, and let's take that a little bit deeper so you understand it. Think of it this way. What moves market prices always? Is it filled orders or unfilled orders? right? What's responsible for the movement of price? Anytime. It's unfilled orders, yes, which is so crazy. I mean, it's not crazy. It's just, but if you think about it, people their minds are so backwards because we have candlestick. When we look at any chart, what are we looking at? We're not focused on the white space. Who looks at the white space? We all look at the candles. Can you understand? Like our eyes are trained to look at the candles, right?